Good evening, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Monday, the 24th of April, 2023. Well, we have a lot going on tomorrow. A lot of the big names. The Alphabet's going to report late in the day. We got Verizon reporting, Visa's reporting, McDonald's, General Electric, Raytheon is reporting. So there's a slew. I'm just giving you the tip of the iceberg. So there's going to be a lot reporting tomorrow. And the market, if you've noticed, has gotten sort of quiet all of a sudden. I think what we've gone into is a hunkering down in front of the fact that there's going to be another 25 basis point rate hike, May 3rd, which is a week from Wednesday. I think the market is now hunkering down into the fact that, maybe the Fed doesn't pivot as much as we thought, down. The market has not changed its opinion that the Fed may be through after this May hike. It wants to see the data. It will get enamored with the idea of a couple of things. First, if the earnings season isn't a beat. Right now, the problem is, I think it's mostly a beat. We saw today First Republic Bank come in. They lost a heck of a deposits. I think $100 million in deposits. Where do you make up that kind of money? So this is going to be real big for them. They've got serious issues that are coming in there, bigger than the market thought it was going to be. They did get a lot of deposits, as you know, in the terms of getting money from the banks to support them. Okay, but nobody's rushing out to buy the bank. Why? Obviously, they don't like what they're seeing of the bank's assets. That's the problem. It's going to take a long time to figure out. Today they were saying, do you know how long that the merger between Credit Suisse and UBS is going to take all in all? They figure 4 years. Can you believe that? So just taking in these banks is not quite the simple fact and fantasy that people think. And that was a forced merger on UBS. I don't think they wanted any part of this whatsoever. All right. President Biden looks as though tomorrow, instead of him coming out live and making his speech, he's recorded it. Why not? He may forget the words. He's 80 years old. He'll be, 82 or close to it if he wins the election. That means 86 he's a president. I've got a problem. I'm an older guy. I've got a problem. This should be left to younger men. All right? I think politics, there should be a cutoff point. These guys would be fabulous advisors to presidents, but do they belong in that role? I don't think so. I mean, it's just the reality of it. And it's going to be a dud of an election because you're going to probably get Trump coming out against Biden again. I feel like it's Holyfield fighting. You know what I'm saying? Another boxing match like it, or WWE. And if you look at the polls, nobody wants either of these men to run from their own party. Saying today the polls, and I'm not making them up, they're against both of them. So interesting as to what's going on. You saw that a bunch of the anchors got fired today. Okay, so they'll say it's amicable. It wasn't amicable. Tucker Carlson Friday night was having a pizza on the air, telling you he'd see you Monday. He's gone. Don Lemon was at work today. He didn't realize it. Nobody called him into the office. And what's going on is you're going to see TV change. They're not going to allow this because the lawsuits are too big. Speaking of the lawsuits, just how much insurance did Fox have, I'm wondering, against something like this? There's a cap in a year you can probably hit on that insurance. They're going to go for it, and I wonder how much it is. And are you aware that unless it's a government fine that they're paying, a private party lawsuit, they can write off in tax deductions. There's many different ways that occurs. It's not the hit to the bottom line as bad as it sounds. The problem for them, they've got another series of lawsuits about to come. So I wanted to go to Verizon. That's going to report tomorrow. We haven't done Verizon. And I dropped Verizon. Why? Because I can get Verizon cheaper through Xfinity. I know it sounds crazy. But I have and I've been told this by everybody at Xfinity, it is Verizon. They partnered with them, and my bill went down, and it absolutely went down. I travel. I've been out of the United States. It works like a charm. Okay. Looks to me like there's a problem in that business model. You have a pattern of lower highs, lower lows. You have a gap in a chart that might or might not be filled, don't know. We've got a market that went right through the 18-day average of closes, but it stopped there. And I think you would agree with me. It absolutely did stop on the first challenge of that number. Let's get to it so that you can see it. I teach you this over and over. Markets like to, if they get to a main moving average, they'll fight a battle against it. Now, the secondary average could have been the 200, never made it there. It was fighting here to stay over it, not to keep going, to stay over it. And it went into a pause. Do you disagree with that? If you do, I don't know what I'm saying wrong here. Then the market gave in. And I don't know what caused this. I'm sure there's something that caused that big gap. And the market's been in trouble ever since. But look, you're at the Bollinger Band. So if you were sitting here with me, you might be able to give me all the reason in the world for this gap. It wouldn't matter. My word to you will be, short term, you're at a Bollinger Band. You're oversold. I think the pros are coming out of this market. I don't care what the earnings do. That doesn't mean they're going long. That is not what I'm saying. I'm saying the odds are strong that people are coming out. In Schwab, so we got that one rally to the to the upper Bollinger Band, and now I wouldn't be surprised if it fall back to the 18-day average. You got overbought, and you try to figure it out. The good news is, on a daily chart, you're out of that severe downtrend. You haven't established what the next trend is, but that part ended, and I think that's good news for this. In the gasoline fund, you came down the other day. We were talking this, and I said, I think the pros are covering their shorts, both hands, coming out of the market. Covering a short is not going long. It is covering a short if they caught this move. That's all that it is. You're oversold. You're down to the combination of the key moving average, the 200, the 100, and the Bollinger Band. So if people are short, that's it. There's no buy signal there. You may end up with one. The market threw one out today in the sense of what? Well, the swing line's pointing up now until you take out today's low, an outside day up. If you've taken my outside day course, you know that's a continuation pattern unless today's low is taken out in the next 48 hours, and then you probably are going to go back here. That's the probabilities. Doesn't mean it'll work, but that's the probabilities. And with this continuation pattern, what's the near-term target? Often the 18-day average of closes. But you're under the 18, which means it's a downside bias. It's one thing to cover a short. It's very different to go long. And no, I am not telling people you buy that. Tesla keeps getting downgraded. And the reason is if you're going to go into a price war, understand what happens. I realize they have the capacity to make more cars, and that's the game that they want to do. The question is, how much do they hurt their margins in doing so? How many more cars do you have to sell to make up what you just gave up? So there's a math that you're going to do. If I cut my price by overall 30%, do I have to produce a third more cars to be where I was before I did that? I don't know that that's the right answer. It's simplistic, but there's much more that goes into everything. But it's one of the ways. Well, the trade isn't liking what they're saying. You're not embedded, but if you do get embedded, there's more room to be given up. So this is a stock that went from 90 to 200, and it's suddenly giving back chunks of what it gained. In XLF, the key here, if this market's any good, is that this red line cannot close under 79. The market has to pop and go to the upside, and the challenge zone, if it's good, is anywhere from 33.72 to 33.82, 82 being the 200-day average. You get back under Friday's lows of 32.03, and the market has some problems then. If that starts turning down, this could be where the chart goes all of a sudden back to the 18-day average and wants to just sit and see what it is. Did I say 33? I think that's 33.03 32.03, not 32.03. XLI, overbought. Now, are we going to get a crossover where the 18-day average gets over the green, or is it just going to come up, kiss it, and turn down? If it turns down, that's bearish again. The pattern in the chart is interesting. You have the swing line down. It's got lower highs, lower lows, but the bias is up and you're overbought. I wouldn't know what to do with something like that. SOX is bearish, but now you're down to the area of short covering, the lower Bollinger Band zone. So the trend down, but into that area where I think the pros walk away. In the home builders, you still have the embedded reading at work, which means on the brakes, I think the pros are buying the market. You have to get to that point. Now, how many days do we have where it closed over 80? Today is certainly one of those. We had it on Friday. We had it on Thursday. And we had it the day before. So we've got 4. So given a good break, there's a number here, a moving average I use. And I don't recall it being hit up here. I think it's missed it both days. If it comes down to it, I'll be interested in that chart to talk to my subscribers in the morning. In energy, all you did is you broke back to the key number, the 18-day average. That's the line in the sand. That's the neutral, the demarcation point. When you're above it, you're bullish. When you're under it, you're bearish. You got overbought. You lost an embedded reading. When you lose an embedded reading, we can do this together. Right there, you get a reading of 80 on the red. If you lose it, you closed under 70, you normally get to the 18-day average. Unfortunately, it all happened the same day. Not much I can do to help you with that, but you can see the market's trying to hold that. Are we trending? We are not. In GLD, you are not trending. You have a higher high and lower low, and you're oversold. Silver, lower highs, lower low, but right into the 18-day average and trying to hold it. So you've got a market with upside bias that had a correction, a bearish correction within that upside bias into the support. What it does here determines the next level. Copper gave everything up, and Friday was the toss in the towel day. Why Friday? Let me show you. If we take a look at this, we come in on Friday. Now, let me get to you right here. Here is the market Thursday. Friday, you lost the embedded reading. I know you'll say that doesn't mean anything, Ira. You're going down at 39.84 maybe, the 18. It doesn't matter. You're going down and you've lost your upside momentum. And you hit the 18-day average. TLT, all kinds of signals to not be short. I think the smart money is just coming out of these markets right now in this wave down that we had, and they'll have to decide where they want to put the markets going into the May 3rd FOMC meeting. And then at the end of the week and the week after, they've got the EU, the Bank of England coming out Friday. This Friday, we have the Bank of Japan coming. There's an awful lot, and I think traders are just going sidelined right now. In the dollar index, higher high, lower low. That spike higher didn't last at all. And in the euro, I think the professional money's coming out. You're overbought and you're into the upper Bollinger Band. So I don't think they're going to hang around there at all. So it's going to be interesting. We're going to get, as I said, a lot of earnings reports tomorrow. There's not a tremendous amount of market-moving economic data coming out. We get some, don't get me wrong. Housing and so on. We get new home sales. There's things, I believe, coming out tomorrow. But they're not market-moving events right now. Their numbers will get, they'll have their 2-minute of play, and then they'll be out of the market, in my opinion. If you want to learn more, there's other ways to do this. You know, one of the things we always try to do is come up with some of our partners we work with, and this was Modern Trader. And from them, have you ever seen Gann square of 9 and what it means for stock indices? I'll bring this back to you. Take a look. Gann square of 9. Do you even know what I'm saying? Don't you think you want to learn it? I think so. What about the benefits of relative strength? Slow stochastics, money flow. Do you know what any of that works? Rules for bottom fishers. It's my favorite rule is don't be a bottom fisher. I love when people do these type of articles. I'd always laugh at them. I go, why? You're fighting the trend. Go to Vegas, you get a free drink most of the time if you're going to play that game. That's craziness to me. But I do like ideas on optimizing stops, and there's none of us that, if you're going to use a stop order, sometimes you trade off momentum. You know that. Like my slow stochastic trades are momentum-based. They're not money-based. Complete difference between them, and I state that in my newsletters. In fact, when my subscribers see it, they see it at the bottom. It talks about that. So very different. You've got to understand how to optimize it. Sometimes no stop is a stop. You're playing the momentum, and that's your stop out. Learn how to play with the different things like that. So you put this together, and what I loved about these articles is they came with all the graphs and all, so you really get to see how this works, the concepts behind it, and you get another part and another tool to work with. Absolute benefits of relative strength. You know, relative strength for years was one of the top indicators out there. Stops gives you the examples, what they're doing, how they're trying to come in with them. So if you'd like this, it's free. All you need to do is go to our website under free offers. You can move your cursor up to the top here. There's an icon, give it a click, get it. And there's other free offers there for you to take advantage of as well. Load up. I'm Epstein. I'll see you tomorrow. Have a great evening.